This week we're reviewing the 27Four Shari'ah Wealth Builder Fund. Now the fund was formed in March 2011. It's of course managed by 27Four investment managers and its benchmark is a composite benchmark. Cobie, take us through what that means when we're talking about a composite benchmark.
Yeah, I mean, you have a look at the table at the moment. You see the managers there. It's 27Four investment managers. The formation date is only very recently at March 2011. There's obviously some funds that they run that have been in existence for slightly longer. The objective there, long-term horizon. So obviously they're trying to get growth out of the fund. Then, as Samantha quite rightly said, it's a composite benchmark, which is really a holistic benchmark, taking all the different other asset classes into consideration. Fatima, maybe just a question from my side. What is the objective of this fund? Where are you trying to kind of place this within the kind of the realm of all the other funds that you've got available?
Okay, so we have 3 Sharia-compliant balanced portfolios. The 2 Sharia-compliant balanced portfolios were very low to medium risk in terms of their risk-return profile. There was a need and there was appetite for a more aggressive fund that had a more aggressive weighting towards equities, but yet was Regulation 28 compliant. So hence the Wealth Builder Fund is different from our other Sharia-compliant balanced fund offerings because of its high weighting, high exposure to equities, making it a more aggressive fund.
So what is the asset allocation if you had to break it down into percentages in equities and then the other asset classes?
Okay, so the asset classes that we use for the Wealth Builder Fund is we use SA equity fund managers and we use global equity fund managers, and together that comprises around 75% of the portfolio, which is the maximum limit that you can have with regards to Reg 28. In the offshore allocation, we were invested in the developed markets and the emerging markets as well as the frontier markets of West Africa. So we've got a small allocation towards Nigeria, around 5% in the portfolio, and the rest of the portfolio is split between emerging markets and developed markets. In the South African equity component, which is sitting I think at just below 50%, that's invested with 2 local equity managers, and we've also got an exposure, a small exposure to gold, which really from its risk profile would fall similar to the risk profile of equities. A small allocation to the Absa New Gold ETF, which is around 5%. We hold a little bit of cash for liquidity purposes, non-interest bearing cash for redemptions, etc. And then we synthetically replicate short-term cash returns through the issuance of sukuk, and that comprises around 20% of the portfolio.
Yeah, I mean, I think the important thing here as well, and I think it's quite different for me, is the fact that you guys have got an African element to the fund. You know, often what we find within the balance space in South Africa is many managers don't look at Africa as an investment horizon. They
well, that's changing, Cobie, very quickly. But
no, sure.
Yes,
but
yeah.
You know, you've got liquidity that you need to consider. You need counter. You need to actually go and do the research on the ground. You know, which I think from this perspective, you know, they're trying to find diversification from that perspective.
How's that Nigerian exposure worked out for you? Is it in the banking space, or where do you have exposure there?
Well, it's diversified across multiple sectors. Nigeria does have a very prominent banking sector, but of course we can't invest in those banks because it needs to be Sharia compliant. But Nigeria has got a growing stock market. It's one of the largest economies on the African continent. It's a very populous nation. It's a very populous region. It's got fantastic growth in terms of consumer.
Would you up the weighting, basically, in Africa, in African regions, or in Nigeria right now of the overall portfolio?
The allocation, according to National Treasury, towards Africa exposure in a Reg 28 compliant fund is limited to 5%.
Okay, so you're at the top end of that.
Yes.
What are your thoughts on this fund when you're hearing the type of asset allocation that Fatima is alluding to?
Well, I'd like to ask Fatima, if I was running the fund and you have a very high resource or mining exposure domestically, not your Africa exposure, but your developed market exposure and maybe emerging market exposure as well, do you actively have a mandate in place to encourage your fund managers to avoid resources in those countries? In other words, telecoms and retailers and sort of those kind of stocks, or do you leave that up to the fund manager to try and decide that?
Well, we do leave it up to the fund manager to decide that. What you will naturally find as a result of those markets, they are some of them have no exposure towards resources because of the nature of those markets. What you will find is that we're getting access to sectors like healthcare, telecoms, more industrials, more retailers, more defensive sectors, consumer goods, consumer services. So that's a nice diversification element to
But
our
is it
portfolio.
explicit or implicit in terms of what you're getting? In other words, are you requesting that, or is the fund manager sort of doing that automatically to offset your local resource and
No,
mining
no,
exposure?
it's we're investing in pooled investment portfolios, so they're not
So,
segregated
okay,
mandates. Also, globally, there are a limited number of offshore Sharia compliant investment managers. So we also need to be aware of the universe of Sharia asset managers globally. It's very limited and very small.
We're running out of time, so let's get into the crux of the matter when we're looking at funds. What are the returns have we seen? Cobie, take us through that.
Sure, look at the table that we've got for you at the moment. You'll see the returns for the Wealth Builder Fund. And as I said, the fund hasn't been in existence for a long period of time, but if you just look at the since inception number at the bottom end of the screen, you'll see there's a return at 6.7 relative to the composite benchmark return of 6.4. Also volatility reduction. If you have a look there, 5.9% volatility for the fund relative to the actual benchmark at 6.4. And I mean, and those are good numbers. I mean, let's just quickly have a look at it from just from a cumulative graph perspective. There you can see in red, you can see the benchmark relative to the actual fund in blue. You see the Wealth Builder Fund there in blue, and you can see it tracks the benchmark, obviously with slightly less a risk. And we've been speaking about asset allocation, and there you can see the asset allocation on screen at the moment. South African equities at 47%, Sukuk structures at 20%. That's a synthetic, obviously yield-based investment because it can't hold cash-based instruments. And then the foreign equity there at 26%. SA cash at 2%, and gold then sitting at 5% at the end of the day. I mean, I suppose the difficult thing here is trying to diversify. You know, kind of sitting in the unconstrained space and being able to diversify just across any instrument in South Africa, you know, that's really nice. I mean, it's a bit tough to do the asset allocation here.
It's very challenging to do asset allocation in the Sharia compliant space. You don't have suitable alternatives to the conventional market. So we don't have government bonds. We don't have South African Sukuk. National Treasury is looking to launch
looking to do
a
that. So
Sukuk
that
quite
could be
soon.
an exciting
And
development.
that would add a tool in our toolbox.
Yeah.
But currently we don't have that. The Sukuk that we do in South Africa is not really the same as Sukuk that's issued in Middle Eastern countries. The Sukuk that we do here is very vanilla. And its yields very often are around 50 basis points less than STEFI yields. So in a way, you know, there's a lost opportunity cost with that income component.